The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Folks, if you have any questions, it's 877-927-6648. And the first question that someone asked me this morning was this the top on the 19th, and it's not going to top again on August 3rd, like I'm assuming? Well, as you know, we had the new moon on the 19th, and in bear markets, you sell on the new moon and buy on the full moon. I'm not sure what is going to happen in the next 9 days. All I know is it's a very powerful Bradley date, and I think I'm going to be, putting out a really strong sell signal at that time with some history behind it. I've been working on it for a couple of weeks now, and just showing the similarities to other years when we've had the same situations of bear markets. But, until we get to that point, I don't know. All we've done now is we've had a really strong 3-day correction coming off that high, which happened to be a new moon on, July the 19th. Whether that was the high or not, I'm not sure. It could have come in early, just like the bottom came in, a bit early, a couple of days in early June. I was looking for it to come in around the, I think it was around the 18th. It came in around the 6th. It could be doing the same thing. But we will have to, leave our questions unanswered until we get to August 3rd. Frankly, we've got some really good trading markets. One of the charts that I put into Tiger TV this morning was the chart of Apple. You can see the beautiful AB equals CD pattern that led to the bottom down at $530 a share. And then we had another Gartley sell pattern that went perfectly to the 786 of the high that came in around $617 a share. And just this morning we completed another AB equals CD pattern exactly at the 61% retracement of the previous low. So you can see the beautiful harmony in a stock like Apple. Any stock that trades over 1 million shares a day, you certainly you'll see this type of harmony a lot more than it will not be there. It's not there all the time, but 90% of the time you're going to see the harmony of these numbers that we look at. 618 and 786 are the contracting numbers, and 1.27 and 1.618 are the contracting numbers. Now, what I decided to do this morning, one of my friends sent me a report from Merrill Lynch's equity division about some of the most important charts that they see happening, and they were so good that I wanted to share some of them, with you here in the the Tiger Den. The first one, that I'm going to be talking about is the history of the volatility index, and it gets a lot of bad rap because people say that it doesn't work, but frankly, it really does, and it's actually one of Basil's 3 little dollies. So you have to respect, his opinion because he's pretty experienced with it. But it really shows the the volatility of the stock market at certain times. And during the 1930s, when things were really crazy, they had 15 different occasions where the volatility index spiked above 50%. Since that time, there have only been 5 such occasions, 1946 and then 1987, and also September, October, November of 2008 when we had these 3 big spikes. And I think we're getting ready to have another spike like this coming very shortly, sometime probably in the fall, because, the fall is, the time when we have some of our biggest bottoms in the stock market and some of our, our larger corrections. So we'll have to, again, wait to see if this is going to happen this year. But these are some of the things that I am looking at that I think will be relatively important. So the main thing that I wanted to do is to go and show you another chart that shows the long run in history of what's happened with the stock market as far as volatility around the world, different things. These are really great statistics, folks. I mean, these are things that you just don't get by not researching it, and Merrill Lynch does a great job of researching. I happen to know that. I almost took a job with Merrill Lynch many years ago but I'm glad I didn't. But it still was a good firm. But it basically shows, going back to 1602, that was the very first stock company, was the Dutch East India Company. It was the very first stock company. And then we finally organized our stocks in 1792. And so it just shows you some of the things in there. It shows you that the worst day in the history of our market was October the 19th, when the Dow fell 23%. That's the largest drop ever. If you were looking at it on a percentage basis today, the Dow would be down 2,600 points in one day. I would like to explain to you how scary that day was, but it was by far, without doubt, the scariest day that I have ever seen in all of my years in the market, because liquidity had dried up and there was basically no bottom to be found. However, the low day, on the next day, October the 20th, the Dow made a slightly lower low at 1,666, I believe was the exact number. I'm doing this from memory. But that low was an exact 61% retracement off of the low that occurred on August the 9th of 1982, which was the bottom when interest rates started to drop, and they've been dropping, ever since. So these are numbers that, once they hit, you have to really respect them, because, they're telling us that that's what we're really looking for. If you get a chance and to go into Tiger TV and take a look at some of these things that I'm posting, as far from the Bank of America Merrill Lynch history of the markets and stuff, because it goes back and gives you a great deal of history, and I think it's important that you understand where some of these things come from. One of the charts that I'm going to put up next, it shows the U.S. asset returns by decades, and it goes back to the 1920s, and you'll see that it's very unusual for over a decade to do better than 20%. And so this is, these are things that you have to keep in mind when you're investing, and that's in true of watching your money all the time. But I'm a firm believer that you don't want to be in the stock market all the time. You want to try to buy it when it's really, really low and sell it when it's relatively high. And that's the whole, premise of, what we're trying to do, with some of the things that we're working on when we're going through the questions that we have here at TFNN, and then also when people in the Tiger's Den, which is a great place to go, if you're trading, live and you want information from some really smart people and some really good charts. There's a really good information coming on all day long, and it gives you a pretty good idea of what's going on in the markets at that time. Someone asked me today, what do you do when the markets are really crazy? And I said, well, I trade them. I just move down to a smaller time frame, and that's all I'm looking at. Now, basically, I've been bearish since the 19th, because we were making a beautiful, AB equals CD pattern up at that level, coming in at a new moon. And the new moon, if you're in a bear market, should be sold. Now, I don't know if we are going to go straight down from here or not. All I do know is that after August 3rd, I believe very strongly that that's when the bear market is really going to start in earnest, and that's what I'm looking for as far as the overall extent of what I think will be happening. Now, I'm going to put in the Bradley model into the Tiger Den and also into Tiger TV, so you can actually take a look at it. But frankly, what I'm watching here is the fact that we had three higher highs coming into the new moon on the 19th. It made a perfect AB equals CD on the Dow. I think we were on the air when it was occurring at 129 or 12,950. The high was, I think, 12,970, and it did it on a quick spike, with the Nasdaq and the S&P unable to make new highs. And these numbers were, the patterns and the numbers were the same in the Nasdaq and also in the S&P 500, and these are the numbers that we were looking at. Now, the smaller cap, the Russell 2000, did not even rally nearly as much. So that was telling us it was having a little bit of a problem as far as being strong, and it's more strength in the market. And also the same thing happened with the New York Stock Exchange Index. It also was far weaker than the others. And so that's another reason, why we're looking at those numbers, very, very closely. Now, one of the things that we have several things to cover, of course, today, but there are two things that I think are very important. And one is what's happening in the interest rate, the Treasury bond and Treasury note market, and also what's happening in the metals market. That's a very important spot to focus on. And the third one we have to watch is the U.S. dollar index, because we're at a real critical level in that one too, as we're approaching that double top up here at the 84 level. So we will be covering those at one at a time. And I think the one that I really wanted to I'm going to show you an analogy here of what I think is occurring in the metals market, and then equate it to what's happening in the forex market. So I'll do it probably in two segments, because I will not be able to get it done before the first break that we have here. And the silver market, it's not nearly as big as the gold market or any of the others. It used to be pretty big, but it's not anymore. It's lost a lot of players and stuff. And if you'll notice that after we've had we've had four bottoms occur here recently, and we've had higher bottoms over the last month since the full moon of July the 3rd. And I believe that we are looking at a very, very weak rally that is occurring here in the silver market at this particular time. Now, what I would like to do is to show you this in conjunction with what is happening, with the euro, because the euro is doing a very, very similar type of pattern where we're having these, moves down quickly, and then the amount of rally that we get is extremely weak. And this is what's occurred, just recently in the, I'm trying to circle this so you'll see it when I put it into Tiger TV. You'll see that, all we've had so far is a 5-day rally last week, and we ended, at the very end of the 5-day rally, right on the low, making new lows, and that set up the gap down, that had occurred today. So when you take a look at this, you'll notice that these very, very weak rallies that we have usually lead to more weakness. And because when cycles bottom, they usually give you a pretty good chance, to have a pretty good rally. But this one has just basically done, very, very little. And we're very close to the 120 level, which is the 1.618 expansion on the monthly basis. And what I'm saying is the low in June to the high in June, if you multiply that times 1.618 and expand it, you're going to get down to the 1.27 or 1.618 level, which is another 120 pips from where we are now. Folks, no matter how you look at this euro really looks bad, and that is not a good sign, for what's happening in Europe, in my opinion. But the chart looks bad. The weekly chart looks absolutely horrible. And, it appears to me that, we are going down, lower and lower, because we're having less and less, we're looking at least.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we were discussing the euro and also the U.S. dollar index, and I've posted into the Tiger TV the long-term weekly chart going back quite a few years in the euro, and it shows that we're going to have a very nice 3-drive pattern stopping at the 61% retracement. That comes in at 112 to 113 in the euro. We're now at 121, so we still have a considerable way to go if it does, in fact, get to that point. That would be equated to probably about somewhere between 87 and 91 in the U.S. dollar index. Now, the U.S. dollar index today did make a marginal new high above 84. We're trading at 83, 82 right now. Whether it continues higher today and closes into the high end of the range, what it really needs to do for a breakout. Otherwise, this is just a fake out in the U.S. dollar index, but it's still relatively early in the day, and it could easily move higher. But right, that 84 level is very, very strong support. Strong resistance, in the dollar index, which equates to the 120 level, 120 to 120.50 level in the euro. It's very, very manageable here. I mean, we're not having any great, panics of any kind. We're not seeing any spikes in the volatility index, so there's no fear out there as yet. I think it's coming, but it's not there yet. So that's basically, what we're, just trying to, simulate, how it's going to get to some of these spots that we're looking at. Sometimes I lose my train of thought because I'm trying to cover too much, but there is something that happened in Spain and Italy today that is absolutely absurd. Someone with an IQ of about 6 must have done this, but they've actually banned short selling in Spain and Italy. Well, basically what that does, it just dries up liquidity. and it doesn't help anything at all. And they say it's a temporary ban, but believe me, it is not. First of all, if you meet someone on the street, only 1% of the people that you meet on the street will even understand what short selling is all about. And that's why you don't see it. They understand puts and calls. Maybe you might find 5 or 10% of the people that might understand what a put is, but frankly, most people do not understand, short selling. And I had a hard time describing this to my daughters when they were, understanding, what I was doing. And they said, Dad, how can you sell something that you don't own? And I tried to tell them, well, we borrow it from somebody and then give it back to them. And if we borrow it at a lower price, we make money. And if we borrow it at a higher price, we lose money. That's the basis of, what we're doing when we look at this. Now, if you have any questions, it's 877-927-6648. We want to spend just one more second here on the liquidities in the market, because I think we're going to be seeing some really big swings. I think they've already started. We haven't had any 400-point swings in the Dow as of yet. Remember, we had a whole bunch of them, way back in the spring, back in April and May. And I said all along, someday we're going to see a 700-point swing in the Dow Jones Industrial Average. And the reason for that is if you go back and look at history will show you that you will go back and you will find swings of X number of points, and if you multiply that times 1.618, that will give you an idea of what the next major swing will most probably do. And since a 700-point swing on the upside, it would be something of an all-time record, we would assume that it would be to the downside, because fear is a greater emotion than greed, and markets drop faster than they go up. The second reason for that is that we have the Bradley model starting very negative vibrations, quoting the Beach Boys, starting on August the 3rd. And that just means that the cycles that are going to be present from August 3rd for the next 13 months are all mostly negative. Now, there'll be some wonderful rallies, and there'll be, falls in between. And the other thing is I could be totally wrong. And, and that happens a lot. But sometimes I'm right, and when I'm right, that helps. But when I'm wrong, I'm certainly the first to admit that, and stand out of the way, because I don't want to do it. Perfect example is the bonds. You know how bearish I am, the bonds, and yet we tried the TBT at 1501, and it went below the 1480 level, and then it went into new low ground, and we made new highs in the bonds today. We made new highs in the notes. And not only that, these weren't even going down when the market was going up, so that was telling you that there's something still out there that's not there. One of the reasons I posted those statistics from the Merrill Lynch Bank of America report was it shows that some of these things can last, longer than you might think. Some of these periods might last 3 or 4 years. During the 1930s, we had low interest rates for 4 years. And whether this occurs the same time or not, I'm not absolutely positive. But we'll have some better ideas as we get past that August 3rd date. We got a break coming here to pay some bills, so it's 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to be talking about the Treasury bond market and Treasury note market for the next few minutes here. We've reached new high ground in the Treasury bonds. We went above the old high at 153. We did get to 153.01 today. There's a 1.618 expansion in the Treasury bonds that will occur at 154.24. And, we made new highs in the notes, too, which I will also post into Tiger TV. But, these things, interest rates are still going down. The rates are still negative in France. And it's looking as though, rates are going to stay down for a while. We will get into this thing and hopefully get into it right. I'll keep trying till I finally do get it right. I've done this before in many markets, and taking little losses, every so often is far better than to buy and hold. The buy and hold, it really gives you a lot of trepidation for several things. That it eats away your trading soul when you have losses every day. I have to tell one of my favorite stories from Drexel Burnham is I had a very large speculator when I was at Drexel. Most everything that was traded there was done by me. I didn't have anyone making their own decisions. I was basically trading the firm's money and some private equity. This was before hedge fund stuff, back in the early mid 70s, and so I had a few spec customers, and this fellow was he was a furrier in Los Angeles, relatively famous fellow, but he was a pretty good trader, and he was in the treasury bill market, and the T-bill rates were 14%. He thought they were going to go to 20%, and so he started selling T-bills, and this was in 81, which was right at the bottom. And the first couple of months, he just kept getting beat up. I mean, he was getting killed, and he was down about $75,000 at one time, and he finally said, I give up. He said, reverse everything. He said, I don't care. He said, if I lose everything, he said, these interest rates I think now are going to go lower. And so he reversed, and sure enough, he made about $3 million over the next 2.5 years. But that's just the fact that the frustration index got to him. We got a call from Jim in Palm Harbor. Are you there, Jim?
Yes, Larry. I've got a pleasant problem in that I shorted the E-minis at 1363, carried them over the weekend. I keep lowering my stop, but I've lowered my stop now to 1343, figuring 10 points above the bottom of today.
Correct.
Where would you put a stop? It's only one unit, but I'd hate to give it all back.
Well, I think you've got a good stop, because that's part of the opening range. You'd be back, and if you have to get above the 61% retracement, because I'm sure you realize this, but today's low was an exact 786 retracement, to the exact tick on the longer term chart going back a month. I'm sure you see that there. I'll put that into Tiger TV so everyone can see it, but when we hit the 1333, that was the exact number, and all we've done is have a little shallow rally. So your stop at 1343, I think, is a good one.
Okay, because I'm looking here. I see that 50% was going back to June 30th was around 1339, and that's where. So I wanted to be above that. But I've been having trouble with my charts today, and that's why I called you.
Yeah, I think 1343 is as good as put it in an odd number. 1343.25. I don't like even numbers, and that's just my own personal preference. But we frankly did go exactly to the 786 this morning. I was actually watching that. We only stayed there for a brief second, and the last time we went to a 786 retracement, was back on the the 12th of July, and that took us all the way up into that new moon. And so as long as we can hold this is an ideal situation for the scenario that I'm assuming is going to happen, and that is the fact that would be going into this high on August the 3rd. Now we could be at a lower level, but we'll see if it's going to be doing it at that time.
Okay, and then you were just about to talk about the bonds and the T-bonds, and I'm looking here. We've backed off a full point almost from that 153.01 high.
Yes, that's not much in that market. I mean, a full point in the bonds. I mean, some people get excited about it, but they'd have to drop 3 or 4 points, and then you'd have to say, oh wow, this was a fake out at a double top, and then then we're getting ready to move higher in the rates. But we just can't say anything with a 1 point drop, Jim. It's just too small an amount.
Are you taking another stab at TBT, or just going to?
No, I'm not taking another tab at TBT until we reach the 154 level in the bonds. Then I'll look at 154.54. Then I'll look at it again, because we made new highs. I have to respect that. We've made new highs, in the Treasury bonds. And in the Treasury notes, and the Treasury notes, are the shorter term. That's a 10-year or less, and that's a very important thing to watch, because a lot of money is there. I think there's probably as much money in the 10 years as there are in the 30-year. But if you'll take a look at that, if you go into Tiger TV, you'll see that Treasury note market going back for a year now has been perfect. We had a perfect butterfly pattern, form up at the 134 level. Then we backed off only 2 points. And now we've made new highs, decisively have made new highs, and it looks like we're going to get another point or so to get up to that 136.11 in the T-notes, and that's the level that I'll be looking at in the notes, which is the equivalent to the 154.24 in the Treasury bonds, and that's what I'll be watching.
When I get near the den, I'll go ahead and look at both of those charts then.
Sure. Then they really they show that we've made lower lows in rates, so there's no reason to get extremely bearish yet. I mean, and I'm really bearish, and I'm out of the market. So I'm fortunately I was looking at selling some S&Ps when we were getting up into that 1370 on the 19th when I was listening to Steve and Tom's show, and also Basil. He was also, saying, boy, this is a real critical level here. And the way that it made it, it just went up and struggled there all day long at 1376 three times, and then finally, it gave up the ghost. And then on Friday, it told you that you were right, and we've had 3 hard down days.
Okay. I'm just looking here. It's kind of interesting, though, on this T-bond futures. It looks like that the high on a week ago, Monday, was right around the same 152.10. So it'll be interesting if we pull back the short-term support, or we're going to break it this afternoon.
That's the one thing. See, I watch the support and resistance on these things, because realize that the bonds are very heavily traded, and so when you're trading something that's really liquid, like bonds and gold and crude oil and stuff like that, you're going to get a lot of swings, because these people, they book money. I mean, this is the business of making money. It's not about being right or wrong, and that's why we have these swings. That's why these Fibonacci numbers work, is because they're based on fear and greed, in my opinion. And, this is where we have the advantage that we're looking at, is when we're watching these numbers. And when they fail, which they do fail about 25% of the time, you got to stand aside and, go from there.
Okay. Sounds good. Thanks.
Thanks for calling in, Jim. Always appreciate you calling.
Thanks.
Okay, folks, if you have any questions, it's 877-927-6648. But like I mentioned to Jim, the only reason I would want to be going, long the TPD is that we need to get those bonds up to that 154 level, and realize if the stock market starts to drop a little bit more from where we are now, we could very easily make that and possibly go up to that dreaded 160 level in the Treasury bonds. I say dreaded 160 because at that price I have to ride in Mr. O'Brien's boat, which unfortunately I would hate to do that, but we'll have to wait till we get to 160, and then I will, very pleasurably get on the boat. He didn't say how long I had to stay on the boat. See, that is the real... I've talked to an attorney, and he said there's a lot of holes in this contract, so I'm trying to figure out way I can get away from it, and that's what I'm really trying to do. Now, the next chart that I wanted to show here into Tiger TV, I think is a very important one, and that is the chart of the Dow Jones Utilities versus the New York Stock Exchange Index. And as you can see, the New York Stock Exchange Index is the red line that overlays, what the price of the utilities. And you can see the utilities have gone and made new highs, from March, whereas the New York Stock Exchange Index has been going down, making lower highs since March. Now, part of the reason for this reason in the Dow Jones Utilities is people are they're clamoring for higher yields. And when they do that, they go to stocks that are yielding high yields, and the utilities traditionally yield higher yields than other stocks. And this is another reason why the bonds have also, convertible bonds have also, gone up, because people are looking for, higher yields also. Okay, we've got another caller from Mike in Florida. Are you there, Mike?
Yeah, Larry.
What can I do for you?
Hey, Larry. The version of the Bradley model that I'm looking at, it's got a major turn date of July 28th, and I think you said that your turn date with what you use is August the 4th. Let's say that we run down into July 28th or down into August 4th, and let's say the bonds hit 160 at that time. I mean, do you think that change the output?
It certainly could. Yeah, it certainly could. And as a matter of fact, there could be an outlier event that might precipitate this whole thing. From what I hear from other friends of mine, it could be this LIBOR scandal that they have going on in London and stuff. And I happen to have some contacts at a couple of the larger banks, there, Barclays and HSBC. And frankly, they're worried about what the extent of this thing actually is and how far it permeates into the United States, because they're talking about the larger banks in the United States might being involved in that. Boy, I tell you, if that hit the fan, I really think that would be an outlier event that would really be, really be tough to overcome. But we got something out there. I don't know what it is, whether it's the euro going to par or whatever it is. There's something out there. From I'm just looking at the overall equity markets. there's something out there that's really scary that we don't know what it is.
Okay, so again, you pretty much think that this trend that we're in the Bradley model, we're going to run up until like August 4th, and then from that point turn down.
August 3rd, that's what I'm looking at. Now, we could be at a lower high on August 3rd.
Right.
The important thing is I want to see what that cycle, what that cycle is going to do at that time. What I'm preparing now is I'm going back and over the bear market years, the major bear market years, and I'm comparing those with the Bradley model. So they put the Bradley model over those bearish years just to see how accurate it was and if it in fact would be of help to us. Now I've already done the work, so I already know the answer to it, but I'm going to put that in next week's newsletter and show the folks that, look, this is what we have, this is what we're looking at, this is what we should do. If we're wrong, the market will be going up after August 10th, and we'll stand aside or get long or punt. We'll have to wait and see. But I'm going to try to give a different scenario of why things have happened in the past, show them why they occurred that way using the Bradley model, and let the folks make up their own decision. Because this is one of those decisions that you want to make that is based on your 401ks and your keyhole, things like that people have for retirement where they're in stocks. Because if you remember last May, on May the 2nd, which was the anniversary of Osama bin Laden, being hit, you remember, and that was also a major new moon. That was also a Bradley high, and since that time, we've been in a downward trend. Even when we've had some tremendous rallies, we're still in a negative market. So that's why I'm going to try to do this in next week's letter to get people prepared for what could happen.
Okay, and Larry, I'd just like to throw out something fundamentally. By trade, I'm a custom metal fabricator. I do custom metal work, and a lot of times I have scrap metals that I take to a scrap yard. And for the longest time, for like over a year, the average price I was getting for scrap steel was $10.50 to $11.50 per 100 pounds of scrap. Well, 2 months ago, it just like craps, and it went all the way down to like $6 a hundred. And
wow, 40% drop?
Yeah, just like that. Just over less than a 2 month period, it went from paying $11.50 a 100 pounds all the way down to 60 cents. I'm sorry, $6 a 100 pounds. And they said because the demand is just fallen off so greatly. So.
Well, that's good information to have because scrap steel is used. We use steel in almost all of
right. Well,
many manufacturing products.
Right, and from what I understand, a lot of it gets shipped to China. But anyway, it's something I see from the work that I do, and I figured I'd just throw that out there. It's fundamental.
Okay, great. Thanks for the information, and thanks for calling in. Appreciate it.
Bye-bye.
Okay, we have another caller from Greeley, Colorado. Are you there, Bob?
Yeah, Larry. I was going to ask about Ryland Hones and about Corzine. How come he's not in jail?
Well, he must have bought some extra time. I think we have a break now. Stay with me, Bob, and I'll try to. Ryland Homes. Do you have the symbol?
Yeah, RYL.
All right, thanks. Stay with us after the break, okay?
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back. Bob, are you still there?
You bet.
Okay, I put up Ryland Holmes. I put up the weekly chart, and you'll see that, it's not even rallied back 38% from its all-time high up into the high 80s. But if you're interested about what is happening right now with it, I'm going to put in the what I see on the daily chart going over the last 6 months. We formed a huge 3-drive to a top pattern, and we've completed a perfect AB equals CD swing exactly where it's trading right now at 26.48. Right. So if you're in this stock, I would certainly be out of it, and if you're short, I would keep a stop of about 27 and a half, something like that, because there
I got it at 27.27.
That's a good spot, and it's got a pretty good chance of breaking here. The fact that it's up these 2 days, with the market being down, is a little bit troubling. But that's the way stocks move. Sometimes they I don't know the reason why they do it, but there are some stocks that go against the trend, but they come back and go back to the trend eventually. But that's what we're looking at, on a shorter term basis.
Do you think it'll be coming down or going up?
It should be going down, yes. I think unless it makes new highs, then I would have to say that, it could make an expansion to this level, because, the stock has gone from 60, up to 20, or from $6.50 to 27, so it's gone up 4
I made
times.
80% on Toll Brothers.
And it's been a huge
back in
move.
October.
That's correct. So it should be over, but whether it's going to be or not, I don't trade stocks, single stocks. Occasionally I'll do, Apple or Google or, something like that. But as opposed to looking at overall stocks. I don't do that very often. We do all of our business in Forex and futures.
There's a big divergence of the transportations in the S&P.
Oh, huge, yes. Yes, sir, there certainly is. Just
so,
like
I mean, there's got to be abundance of inventory.
Well, that could be the case. I don't know. I don't follow those things. I only look at the bar charts. That's all I look at. I don't look at any of the fundamentals, like the gentleman that was just on from talking about, the price of steel prices. That'd be good to look at the chart of the price of steel prices, but that doesn't factor into whether I'm going to make a decision to buy or sell.
It's true. When you take in aluminum and copper, they're giving you 40% in the last couple of weeks. They really are.
I'm aware. I look at the overall, the metals, the industrial metals. I do look at nickel, copper, and aluminum, and these have been going down for a long time. This is not a surprise. I've been saying that all along, that we're in a major bear market, and I think the major is going to be emphasized after August 3rd. I keep saying that, and I'm putting my reputation out on the line. And if I'm wrong, of course, I'll eat a little crow, which I do several times a year. But when you're right, it's going to pay off. So this is what I'm trying to do here, is prepare myself, for this August 3rd thing that I see coming.
Good for you. How about MF Global? What's going on?
I wish I knew. It's totally amazing that $1.2 billion disappeared. They gave a few small accounts got about 25 to 30% of their money, but none of the larger accounts have gotten any. And now you get less and less information out of them. Frankly, if you want to know my opinion, Bob, I think that the CFT is so embarrassed about what's happened that they're trying to figure out some way to work out of this, without losing more face than they already have. And then they get slapped in the face again with another one with PFG, Paragon Financial, that looks like that one to be somewhere around $200 million. And again, this is really, and it scares me. It really does, because I always thought that this was the last bastion of safety, was your money in your accounts like that. I was really, really shocked to see what happened, and there could be more coming out there too.
Yeah.
Well, we're ending the show. Right. Thanks a lot, Bob, and I love Greeley, Colorado. I've been there several times.
Have you?
Yep. Been to a big cattle operation there.
All right.
All right. Thank you, my friend. May God bless everyone.